All right, big news today. Warren Buffett just revealed the $1.6 billion bet on UnitedHealth, a stock that he used to own. He rebought $1.6 billion worth. It's 5 million shares of UnitedHealth. The stock absolutely ripped on the news, but should you buy it now or should you wait? In this video, we're gonna go over what happened, why you should buy the dip, why not chase it, should you follow my take, and then we'll wrap up the video. Before we get into it, 90% of you guys are not watching. Please make sure to like and subscribe to my channel to get more content like this. With that being said, let's get into the video. So first and foremost, what the hell just happened? Berkshire Hathaway 13F filing shows a new stake in UnitedHealth. 5 million shares worth about 1.6 billion as of June 30th. It takes like a little bit of time, a couple weeks for those filings to go public. So when they buy the stock, they file it, and then we don't really see it until much later, which is now, and this just came out. UnitedHealthcare jumped 10 to 20% on the headline, and in that same filing, Berkshire trimmed Apple and Bank of America stock and exited T-Mobile, a classic capital rotation. Important to note, 13F data is backward looking. Prices and sizes can change after filing. Why buy the dip? So obviously UnitedHealthcare was down, and so why did Buffett go and buy this stock, and why did he go and buy the dip? He thinks it's temporary pain and a durable moat. UnitedHealthcare is the largest U.S. health insurer with services powerhouse. Headlines whack the shares, not the long-term economics. One-off shocks fade. The Change Healthcare cyber attack carried multi-billion costs and disruption. Nasty but finite. Mean reversion costs, 2025 medical cost trend is running hotter, around 7.5%, but cyclical spikes tend to normalize over time. Let's go check out UnitedHealthcare stock. Let's look at the last, so see, this is what Buffett saw. And I think Buffett used to own this stock many, many years ago. But what he's seeing is that you had all of this stuff, like it is the largest healthcare provider, and now he's just buying the dip. So I think he bought it around here. He bought it, and now it's jumped up. And I think that trend is probably going to continue. It's probably going to keep on going up and up and up and up. So pretty interesting. Let's see, when did he buy it? June 30th. Yeah, so he bought it right here for $266 a share. Now he's at $306 a share. So pretty interesting. And you can see all the other headlines around UnitedHealthcare. So that's why he bought the dip. He was thinking that it's just a bunch of one-off shit that's really just affecting the stock price, not like this business sucks. So that seems like the reason why he bought it. Why not chase it? So why should you as an investor not chase it? Utilization is still high. Management and industry trackers say care usage remains elevated, compressing margins. Regulatory and legal overhangs, investigations, and post-breach remediation can keep a lid on sentiment. You're late to the pop. The Buffett bounce already added double digits. Your entry matters. I agree that your entry matters, but also I love following big-time investors like Warren Buffett. So my recommendation would be to, let's see, should you follow a simple playbook? Time horizon. Buffett plays multi-year. If you need a quick win, this isn't it. That's definitely for sure. That's one of the things that I love about Warren Buffett, that he bets long and he holds long. And so if you do want to go into a stock and you do want to buy individual stocks and not just the S&P 500, this could be a good play because you're going to be riding off his tailwinds, and hopefully this is going to mean that other money is going to come to UnitedHealthcare, which hopefully can help the business and help the business grow. Price discipline, don't copy trade the spike, set buy zones on pullbacks. And so if you can still get in and you want to hold this thing for 5 or 10 years, it might still be a good play for you to get into. Treat as a quality a discount, buy size small if you're new to healthcare. If you don't have any healthcare stock, I probably just wouldn't invest that much money in it. If you only have $5,000 or $10,000, you should probably just be focusing on buying S&P 500 and not choosing individual stocks like this and not following in these footsteps. Diversify the idea. A basket of managed healthcare leaders can reduce single name risk. That's also a good idea. Buying a basket of like healthcare providers instead of just buying one-off UnitedHealthcare. But like, I've made a lot of money on the stock market following other like billionaires that invest in the stock market and looking at what they're investing in. I've made a ton of money doing that. I think there's a lot of softwares out there now today in 2025 that you can go and use to get that kind of information and actually just buy stocks when somebody else buys stocks, which is pretty sweet. I wish they had that back in the day. And if you don't have that much money, again, I would probably just be investing in the S&P 500. Like that's probably that's going to be your best, most safe bet. And here's kind of my take that I came up with, but this looks like the classic Buffett buy a dominant franchise during a storm. If medical costs cool and breach costs roll off, today's multiple can look cheap in hindsight. I wouldn't sprint after a 10% gap, but I build a plan to accumulate on red days. I really like it. I mean, I think it's a good thing that Buffett finally pulled the trigger a little bit, because I think Buffett's been selling a lot of stuff recently. I haven't heard so many news articles about him buying stuff. Again, I'm not daily in the stock market. I'm more of a real estate guy anyways, but just from a real estate guy's perspective, I haven't seen Buffett buying a ton of stuff. So this is finally some good news that Buffett is buying some stocks that you can go ahead and now you can follow along and buy the same stocks as him. I also think that the stock market is really, really hard to predict. And just because a business is doing well, like what I said earlier, doesn't necessarily mean the stock market price of that stock is going to go up. So my recommendation is probably look at other investment classes. And I think the safest thing that you can do investing wise in the stock market land is investing in just an S&P 500 index fund. If you do want to make individual bets, do it on something you can control, like a piece of real estate, buy a rental property, buy a multifamily building. There's so many different ways that you can invest that you can actually learn. And you can actually learn a skill. Even if you lose money in real estate, you actually learn a skill. You learn how to find deals, analyze deals, get financing, insurance, property management, manage a business, right? You learn profit and loss statements, balance sheets, taxes, legal, bookkeeping, accounting. You learn all these skills. You lose money in the stock market, go back to your job and try to remake it. I mean, there's not much like of a skill that you have. Sure, you can learn how to do day trading and stuff like that, but most of you probably don't want to do that. So pretty interesting. Warren Buffett's big play here. I want you guys to comment down below. Are you going to buy this? Are you going to sit this one out? Do you invest in individual stocks? Are you more of a real estate person? Make sure to like this video and subscribe for more content like this. In the top of the description, there's also going to be some links for me to help you invest in real estate completely free. So if you do want to get started investing in real estate, click those links down in the description, and I'll see you in the next one.